Hello and welcome to LifeWire's Outlook series for 2025. We've assembled 10 of Australia's brightest minds to give you an edge as we look at the year ahead. Joining me today is Brittany Osaka from Sphere Asset Management, and we're going to chat with Brittany about the small cap part of the market. Brittany, great to see you. Thanks for coming in for the Outlook series.
No worries. Thanks for having me, James.
Before we dive in, how was 2024?
Yeah, I mean, it's been quite a remarkable year. If we sat here a year ago, we would have been talking about wars, we would have been talking about whether interest rates were going to be cut, whether inflation was going to moderate, all of those things. There was kind of lots of risks in the market, and we were like, whether equities were going to go up or down, we don't know. And now we sit here today, 11 months in, the S&P's at all-time highs. I think the ASX 200's up 15% and small caps are just marginally behind that. So it's been a really strong year for markets. And yeah, I think if we look back a year, we're kind of surprised at how well the year's done given all those kind of factors.
Well, long may it last.
Yes.
For our audience that might not know about your area of expertise, tell us a little bit about where you invest.
Yep, so we predominantly invest in small and micro cap companies within Australia. So that's anything ex ASX 100. And then we also have a global fund as well, which is small cap based. So predominantly small caps, and that's where our focus is. And we like to invest in businesses with good free cash flow, sound balance sheets and valuation support. So they're our metrics, and that's what we look for when we're investing in the small cap universe.
And what about you? What do you love about investing?
Oh, I love that there's always something new. Everyday markets are always changing. There's a new stock, there's a new IPO, whatever it might be, things are always changing. So it gets you excited and makes you excited to come to work knowing that there's so much variety and so much happening in markets every day.
Looking forward to 2025, what's a stock that you think has an exciting growth outlook?
One we've owned in the fund for actually a number of years, and that's Technology One. So the ticker is TNE. For those who don't know, it's the leading software player in Australia. They do software for justice, education, departments, things of that nature. It's not cheap, unfortunately, on multiples today, but it has had very strong earnings growth, and I think can have really strong earnings growth into next year. So they just released their full year result. Earnings grew 18%. And that was ahead of their guidance of 12 to 16. And then coming into 2025 and actually beyond, there's a couple of things that are driving earnings. So firstly, they've got new customer wins in Australia, which is their core market. They've also got product upsells. So you think when you take on a technology, you might not take all of the modules, you might take one or two. Then over time, as you become more familiar, you take on more software. And then thirdly, the UK opportunity. So today, the UK is less than 10% of their revenue. And so it provides a significant runway for growth in the UK market. And finally, the SaaS Plus offering. So they're converting what was traditionally implementation fee into the subscription revenue, which should actually drive higher earnings and cash flows in the coming years. So the business has less than 5% market share today, which is small. So we think earnings can grow significantly in the next couple of years.
2024 was a bit of a breakout year for AI. The data centres went hot.
Yeah.
2025, what's an industry that you think could have a breakout year?
So we're not sector specialists in any way, so I might pivot this question slightly and talk about maybe a market that I see as attractive. So at Spheria, we invest in both Australian and New Zealand companies. And so I think there's a lot of opportunity in the New Zealand market, which I think has been heavily unloved over the last couple of years. I think if you look at the New Zealand economy, they've technically been in a recession for about 2 years. They've had rates get hiked aggressively, and only in the last couple of months have they seen rates fall. So the RBNZ has announced 4 rate cuts in July to try and stimulate the economy. And as we know, when rates get cut, hopefully we should see some improvement in the economy and consumer sentiment. We've recently entered a name in New Zealand, Turners Automotive. So that's one New Zealand name that we've entered recently. They are the leading used car dealership in New Zealand. And they've done a really great job, management's done a really great job growing market share in that market. And we think they can grow significantly over the next couple of years, supported by further store rollout. So they're rolling out a retail channel and trying to drive sales through that retail channel versus wholesale, which is high margin. And they're also driving ancillary services. So you think when you buy a car, you need insurance and you also need finance usually. And so that's added sales and opportunity through that retail that they're driving. So we think, the New Zealand economy improves, rates are getting cut. Hopefully a business like Turners, which is tied to used cars, which is obviously cyclical, etc., that business should do really well.
Been a bullish year. Everything's been running. There's probably not too many bad ideas left out there.
Yeah.
What's been unloved? What's a contrarian idea that you like for 2025?
Yeah, well, at Spheria, we're known to love our contrarian plays. So this is one I think that's somewhat ultra contrarian, but we're going to go with it, and that's Healius. So the ticker is HLS. It is the second largest pathology company in Australia. They've got about $1.3 billion of revenue. And so through COVID, they were obviously a massive beneficiary. You had COVID testing volumes at all-time highs. As those volumes have normalised, you've seen their earnings collapse. And it's been the case across
It's not a word we like to hear when we talk about stocks.
I know, but it's been the case across the industry. I guess this is what the opportunity is. So, you know, the third largest player does about half their revenue, but 3 times the earnings. So you can see there's a real disparity in this business. The business hasn't been run great, but assuming earnings can improve, and that's what we believe is the case, then there's massive upside for this business. I think what the positive as well is the valuation. So it's just recently de-geared the balance sheet. It's sold its imaging business for 800 mil. So it leaves the business with about $400 million of net cash. If you add to that the franking credits, which are obviously value, then the market's only ascribing a third of its revenue in value. So it's only valuing the business at $400 million today. So despite the checkered history, despite what's happening out there, I think earnings can improve dramatically. They're guiding to a better second half, and there seems like a lot of value in this business at these current levels.
Now, we've talked about a couple of stocks you do like. What are you avoiding? What's a stock you're steering clear of for 2025?
So I'll go to our process, because that's always the best way to do it. This stock's actually up over about 400% in the last year. So I think it's one of the best performing small caps, and that's Mesoblast. The reason we don't like it, I will say I'm not a biotech expert, but the run-up in the share price has been on the back of a potential FDA approval. And this is the third time they're going for this approval. So third time lucky could be the charm. But the business is valued at about $2 billion and actually doesn't generate any earnings, and it doesn't have a proper revenue stream either, because all the products are still in waiting approval. So whilst this could be, you know, the
home run.
Yeah, the home run. I just think, you know, given the $2 billion market cap, some of that's already captured in the share price. And it's had a 19-year record of literally not generating earnings, blown $1 billion of cash flow. So it's just a business we'd prefer to avoid.
Last one for the day. Mm-hmm. If you could only own one stock in 2025, what would it be and why?
Yeah, so this one, you know, found out about the Outlook series a couple of weeks ago, and I was like, this is the one I want to pitch. And then it's run about 30% in the last month because
All right,
of
we'll make note. We'll let people know.
We'll make note, but that's okay, because I think it does have really strong tailwinds going into 2025, and that's Praemium. So the ticker is PPS. They are one of the leading specialty investment platforms in Australia, with a focus on high net wealth advisors. And we actually met with one of their advisor groups in Melbourne a couple of months ago, and he essentially said, you know, there's other platforms that have come and spoken to us about their offering, and they can't do what Praemium can do. They can't offer what Praemium can offer. So I think that was real validation for what they're doing and the software that they're providing. They've just recently put through some price increases on their platform. They're also putting through, which should annualise next year, and they're putting through some further price increases on their admin side. So they do kind of back office portfolio admin. They could be in the range of 20 to 30%. And then finally, they've got a new platform offering, so Spectrum, which combines the best of both of their current offerings into one. It's a great suite for both custody assets and non-custody, so anything that you have off platform. And why the share price has run in the last month is they've actually won their first big client onto that platform. That was Euros. So $2 billion of FUA is going to come onto that platform, and it's just kind of validates what they're doing. 1 month or 2 months the software's been launched and they've already won a big deal. So I think there's really good momentum and tailwinds into the new year. And the great thing is it trades on about a third of the multiple, maybe half now, of Hub and Netwealth, which is their closest peers.
It's got some ritzy peers.
It does have some ritzy peers. It's a micro cap, so it just tends to get more unloved. So that's what we see as the opportunity.
Before I let you go, 2024, a booming year, but it caught people by surprise.
Yep.
How are you feeling about 2025?
I think positive, and particularly, I mean, we are small cap investors. So I think, you know, with rates falling, we've had 2 years and we've been saying this for probably a year to 18 months now. Small caps have been unloved. So I think over the period since rates have been hiked, smalls have underperformed large, I don't know, in the range of, I think smalls are flat, and you've had large cap up about 30%. So there's still quite a divergence despite the strong year in 24. So I think with rates falling globally and hopefully into the new year in Australia, we should see kind of smalls play a bit of catch up. I think some of the tech names are very, very expensive in Australia as well. So there's caution there, and hopefully we get some rebound in some of those unloved contrarian names. So yeah.
Awesome. Well, thank you so much for coming in and being part of our Outlook series.
No worries. Thanks, James. Thanks for having me.
An absolute pleasure. Ladies and gentlemen, I hope you enjoyed those insights from Brittany Isaka from Spheria Asset Management. Remember, we've got our Outlook series running on our YouTube channel through January 2025. Make sure you check out the videos.